Derek Townsend, City Fund Capital Corporation. We're a commercial mortgage broker with our office in Vancouver, but work across the country. Underwriting criteria seems to be ever changing, just like every variable in this market today. There are, strong demands from lenders to work into the term business on a conventional basis. Construction is slowing, and conventional term is some way they can fill their boots. And so spreads are actually compressing, which is good to see. And that allows for larger loan amounts as well as increased amortization. On the construction side, there's a lot of volatility, and so lenders are treading cautiously with increased contingencies or areas that they've seen problems in over the last couple of years. So lenders remain conservative, but they are looking for areas of competitiveness through conventional term financing. And if you look at the CMHC business, they are always changing and hard to keep up, but they tend to be more conservative today. So spread trends on CMHC business, the 5-year availability is very tight. So spreads are increasing or unavailable from some lenders. The 10-year remains very competitive and spreads are tight. On the conventional basis, as I noted, they are decreasing or have been, call it about a month ago, but with all the volatility in the bond markets, lenders are starting to hedge that with a bit wider spreads, but overall they're lower than where they have been over the last couple of years. They are hard these days, so the proponents are key. Having the group that has experience, that has liquidity to solve problems, that is a great start. The viability of a project plays a part, but more so, or I should say less so than the proponents, given that most deals wouldn't move forward if it wasn't viable. And the key, I would say, is the proponents. Well, the market's slowing. I don't think there's going to be any shortage of capital coming up. I mean, apart from the 5-year CMHC business that just has a huge demand for a very small supply, the construction market is slowing as rents soften, absorption is taking longer, and so borrowers are rejigging their pro formas to see if the numbers still work in today's environment. So there's lots of construction availability. On the term side, CMHC, currently there's availability, but the amount of COIs, certificates of insurance from CMHC that are out overtake the amount of available capital. So currently we're okay, but in, call it 12 months from now, there may be some challenges with CMHC availability. And then on the conventional term side, there's plenty of capital as CMHC has taken all the business for the last number of years. So, we have a lot of availability in conventional term, and then we'll see how that plays out as they get more aggressive, as lenders choose that instead of CMHC. Politics. Our Prime Minister will be decided in the next couple weeks, and I think that'll be pivotal. Conservatives have a much different view than the Liberals, and so what they do with CMHC or the ACLP programs could be very different. That is the main thing. But then also on the south of the border side, tariffs. What is that going to do to construction? What is that going to do to the viability of projects? And then lastly, it would be immigration. Over the next year, as the new Prime Minister takes over, what are they going to do with immigration? If we don't have people moving here, our population could decline, which means we have decreasing rents, decreasing prices, not enough investment in pensions from people working. So I hope that part is smoothed out with the new Prime Minister.